Yeah, so very good evening to all our partners, team SBI, and dear colleagues. Thank you for coming on such a short notice. And we all are aware that why we have gathered today. It's a very interesting topic, and we have a very wonderful guest today with us, Rohit Chimpi. Rohit is basically a CFA, and he's a fund manager and equity analyst too. He's having an industry experience of 15 years. Rohit have joined SBI Mutual Fund in 2006, if I'm not wrong, and has been engaged as an equity portfolio manager since 2011. So he currently manages SBI Magnum Equity ESG Fund and SBI Retirement Benefit Fund. In his previous assignment, he has advised foreign institutional client mandate that were focused on Indian equities and manages domestic mutual funds. Since 2006, Rohit has also been a key member of our research team, tracking sectors such as financials, industrial energy, and real estate. Before joining SBI Mutual Fund, he had worked with television for 18 groups, JP Morgan, HDFC Standard Life, Insurance, and other companies too. Rohit is a charter holder of CFA Institute, as I mentioned, from USA, and he's also a commerce graduate from Mumbai University and has completed his post-graduation in business management with specialization in finance from Senham Institute of Management Studies. So this is the short profile about what Rohit have done in past, and definitely is a very good fund manager. We all are well aware about this thing. So over to you, Rohit. Thank you so much.
Yeah, thank you. Thank you so much. Yeah, just one clarification. I didn't track all those sectors at the same time. So that's and over a period of several years. Yeah. So just this talk to begin with our topic for today, which is the NFO of the SBI Energy Opportunities Fund. So I'll just start off with showing maybe a few slides and talking about the concept of the fund itself and why the product, why we are positive on it at this point in time. And post that, I'd be very happy to take any questions from the audience. Yeah, so really speaking, there are quite a few questions, right? Why are we doing an energy sector fund at this point in time? And maybe the questions in our mind are that as a sector, so one could be that sector has not really done so well for very long periods of time, right? Especially if one thinks about the ex-Reliance companies that are there in the market, and it just seems like over last 1 year or so, the stocks have been doing relatively better. But really, is it going to make us money over the longer period of time? That's one aspect which we try to address too. In addition, I guess there could be worries that there is a significant change in the energy mix, which is likely. Whether these companies would be benefited or whether they will be impacted negatively by this, all these changes. So I think so. Just rushing through why we kind of like this theme, really, because in short, India is among the fastest growing energy markets, and there is clearly a shift ongoing from the old traditional forms of energy, which is oil and coal, and that is really shifting towards. So the nice point is today we are at the spot where the old energy, which is oil and coal itself, is growing, and we have this opportunity to also invest in new energy, and that is something which both the existing companies in the sector are likely to do, as well as new companies which will come are likely to invest out there. The cash flows which are being made by these companies, which is you just think of some of the oil and gas companies or the coal-based, either the coal companies themselves or the power generation side. There is huge amount of cash flow which is being made, which can be reinvested quite effectively into green energy over the next few decades. And really, finally, the energy segment itself is underrepresented in the broader markets, and the valuations are also reasonable. So I'll touch on probably each of these as we go forward. So just starting off here, so with India really as compared to all the other major markets in the world, whether it is US, Brazil, EU, Russia, China, etc., is likely to see significant growth in terms of the energy consumption itself. And see, this is important because primarily it is just think about it. India has been largely an economy which has shifted from agriculture to services in a very big way. And we almost kind of, one could say, were underinvested or we skipped the industrial or the manufacturing part of the economy, which in most cases comes before you go to the services side. So today, with the efforts that sector and the government are making on the manufacturing side, whether it is to make more for India's consumption itself in terms of the import substitution, or whether for export markets where China plus one is becoming an important kind of theme. That's where clearly energy is something which is very much required, and hence India is kind of a market where the energy consumption itself will grow. And within that, over time, if you look at the share of, say, non-conventional energy, which is mainly renewables, that is likely to go from 22% now to multifold. It will certainly grow to more than 50% over the next few decades. So that is really the opportunity, both in terms of the growth itself and the changing mix of the energy sector over time. Now, see the per capita GDP, per capita energy consumption in India is low. And certainly, as you would expect, as the economy grows, that is one aspect which is likely in India's case to do well too, simply because we need to invest in a big way on the infrastructure and manufacturing side, which is likely to drive the energy consumption growth also in India. Unlike some other markets where the energy intensity of the GDP growth is less because either they are already industrialized and moving towards services, like in case of China, for example. Now, just thinking of companies which are there today in the market in these sectors, right? So when you think of, say, the oil value chain, which is there is, of course, the upstream ONGC, which produces oil, for example, and there are downstream the oil marketing companies, the HPBP, IOCs, etc. Or when you think of the gas value chain, where, say, the transportation of gas, transmission of gas by way of GAIL, for example, or the last mile distribution, where we pump city gas into our cars or our cooking gas, for example. Those are the existing companies within the space. And finally, the power sector, where it is today mainly coal-based power. But we also have, the distribution side, where a company like Power Grid, for example, is a large transmission company within the space. Now, what we have seen, right? So why is this? What is the change now? So I think if you just go back to 2020 or 2021, there was this probably wrong notion that the world would get all of its energy incrementally from renewable sources, and the existing forms of energy like fossil fuels, oil, gas, coal, they are not going to be required at all in future. And certainly that view was a wrong one. And 2022 was a very powerful kind of reiteration of that, because as you remember, when the Russia-Ukraine war happened, there was such a scramble for energy in Europe, where the gas supplies from Russia had stopped, for example. Right. So I think the world realized that it is not enough to depend only on renewables, and we need to have a proper policy for the traditional forms of energy as well. And which is where even in India, if you notice over the last year, couple of years, you have seen that the amount of profits which the government policies are allowing companies, whether in the upstream space, they are having higher realization for their final sales, or the removal actually of the auto fuel subsidy itself, and the fact that they're allowing the oil marketing companies to make higher amount of profits, for example, or with the gas and power side, where particularly on power, the government has actually continued to allow them to earn a pretty high return on equity for both companies like NTPC, which are into the power generation, or uh, power grid, which is on the power transmission side. The regulated return itself is allowing pretty healthy cash flow. So, good part is now that here, this was a space which was ignored over last several years. And that is finally coming out and getting its due, where, we are quite clear that government is allowing them to earn a fair return, which that cash flow when generated, that will go to fund their existing business itself. Because keep in mind that India is a growing energy market, and not everything can come from renewables, at least immediately. So you have to have these spaces being allowed to make enough cash flow and fund their own growth. And over time, these same companies themselves will also invest in renewable power. And we are seeing that already happen in a significant way in most of these companies. On the green energy side, really, India is kind of really walked the talk, has spoken about being net zero by 2070, although a little later than the rest of the world, simply because of the stage at which we are, where coal will remain an important form of power generation. And but even with that, the commitments are that 50% of the energy requirement by as early as 2030 should come from renewable energy. And so while India is not removing, say, coal-based power, for example, but the growth, the higher growth is happening in renewable energy. And there's been significant initiatives by the government on things like green hydrogen, the desire to develop the new energy chain, whether solar or wind or hydro locally, apart from blending of ethanol and biogas into the conventional fuels. And see, this is really the proof of how much India is doing on the renewable side. So, if you just look at the chart on the left here, you'll see that so much of the incremental capacity addition is coming in from renewables. And, mind you, this was not even the case 5 years ago, to the extent at which, India is increasing the renewable consumption production is quite significant. And within that, also the mix of solar has gone up really significantly over the last decade or so. Where I remember back in 2005, 2007, we used to always think that solar would never really be price competitive when it comes to comparing with coal. But today we find on an incremental basis, solar is actually far more competitive than coal. Of course, solar has its own issues in terms of time of the day when it is available. It may not be available 24/7, but there are technologies and combination of technologies like solar plus wind plus battery, etc., which can improve say the efficiency of these renewable projects. And India's share of renewable energy, even in the generation side, has now, for the first time in the last few years, come into double-digit percentage terms. The interesting part is that even as China actually has 85% in the solar equipment, value chain, which is that so much of it is imported in India's case. I think the important part is that India is working quite hard in terms of getting the value chain here. And today there are small steps being taken by some of the companies, but over time we have very little doubt that as we have seen in other industries in India, that once you start, maybe you start off with smaller aspects like assembly, but over time you can create the entire value chain in the supplier ecosystem, etc., in the country itself. And we are certainly seeing some of the big actually industrial groups like the Reliance, etc., taking up the entire integrated value chain internally itself. I think the sector itself, in terms of its weightage in the BSE 200, has been really coming down over time. And of course, see, this ratio removes reliance because we want to kind of show how dramatic it has been for the rest of the sector in terms of just the percentage share loss which is happening. And I think we've started to see some uptick over the last few years, but in context of how little it's been, because it's been almost 2 decades of the weight coming down over time. Really, we feel that the sector is underrepresented in the index. Firstly, because there were issues around the profitability itself of these companies, where, as you recall, the oil marketing companies, for instance, at some points in the past would not have free pricing power themselves. Hence, investors used to give a lower PE ratio to that earnings, and hence it was kind of underrepresented. But we think that these are changing and largely getting addressed with the policy reforms that we are seeing in the traditional energy side and the growth of green energy. Now, this is just a representation of, say, the size, the absolute size itself of what, say, like a single company, which is Saudi Aramco, what kind of market cap it has at over $2 trillion. And in the Indian context, and probably all these companies itself put together would not even reach that number there. And of course, the chart is dramatic, and we're not for a moment saying that this is immediately about to happen for any of these single companies. It kind of just indicates that in a scenario where we are moving towards self-sufficiency on the renewable side, that there is potential actually for some of that value migration to happen from some of the large global fossil fuel or traditional energy type companies into, say, our companies as well, to even just about 20 times at this point in time. But here, of course, so since I showed you the chart on the previous slide where the sector, excluding Reliance, has continued to fall in terms of percentage, I think this return actually includes Reliance. So to that extent, you should take it with a pinch of salt. And we can talk a little bit more about the composition of the likely portfolio, the likely the index as it stands today, the benchmark, the Nifty Energy itself, as we go forward. Yeah, so where are we really seeing opportunities? So we kind of think that gas is one space which has been underrepresented. So for a decade we hardly had any gas consumption growth in India. But over the last few years, what we like out here is that the infrastructure, whether it was the rise in the gas grid length itself, or as many of you would have seen, more CNG stations, both for auto and for, of course, cooking gas into our homes. That is something which has been growing. We think that gas is really an important transition fuel in quite a complex, energy transition story. In addition, with global LNG prices being quite soft, given just how much production is there in countries, including the US, that is something which is one space where we are quite positive. On new energy, not many of us would know, but India is among the cheapest producers of both solar and onshore wind. And this is despite China actually kind of controlling more than 85% of the solar value chain. Really, what's going in India's favor is that we have wind power and solar power, which peaks at different times of the day, just kind of given how our weather dynamics are. So, which means that the combination of, say, solar power through the day, wind power at night, and a combination of, say, some amount of hydro or gas or storage, that can mean that we can actually be quite competitive in terms of renewable energy. And what's great is that this grows India because of the cheap cost of wind and solar. That's able to produce green hydrogen also at a very competitive price, which is estimated to go down even further by less than half of the current price. That's something which can be quite useful for even the traditional companies which are there into sectors like oil refining, for example. When they get access to this green hydrogen at an affordable price, that is something that can improve their margins as well. The transmission side also, it's important that India has a strong grid actually, which is simply because in a scenario where there is more renewables, you require more transmission simply because there are the production of it, the generation of electricity is quite dispersed as you would expect. Hence, I think India is well placed in that aspect as well. Now, in our universe, right? So I'll just take a step back and talk about the benchmark itself. So the Nifty Energy Index, unfortunately, is a very concentrated index. So it's only 10 stocks which form the index. Out of which the top name, which is Reliance, is about 33-34%. And another 50-55% is the PSU companies in the oil and power space. So, there you would have the usual suspects like ONGC, NTPC, etc., which are large weights in the index. And, so we do believe that apart from just we're not likely to have that concentrated a portfolio. Certainly, we would like to have, the portfolio of 20-25 stocks to begin with, not just the 10 that the index has. And within that, I mean, we would like to look at, all the spaces on this slide. So, the oil value chain is something that, we all understand well. It has, not just like the Reliance type company that's got, say, the upstream PSUs, the midstream, downstream, the oil marketing companies, etc. The power value chain, which is either the coal producers or power generators or the transmission companies, that's another space. Gas is something we think is kind of underrepresented in the index itself. There, you've got strong companies in India which are on the transmission side and also on the city gas distribution side as well. And the other one, which are quite different now from the index, is the power ancillary space. So, here you've got companies which are in, say, the capital goods sector, which are really in making, say, equipment for power transmission and distribution. That's something which we can look to invest in the fund, though it's not really in the benchmark. We have, the SID allows us to do that. Also, say there are construction companies or EPC companies which are into this space with a focus predominantly on power or power T&D. That is one where we can also look at just as an indication. And, over time, green energy may be quite small in the Indian system today, but we could look at, say, either like utilities which are themselves producing or generating green power, or over time as there are, either new companies that come up in this space. Honestly, this is one where today is a bit underrepresented. We'll need to see how this evolves in terms of new companies coming up. Potentially, there could be existing companies which spin off their green assets and list them separately, or we play it as part of a smaller theme at this point in a larger company. All are possible right now. So basically it's a combination for us of, say, to summarize, the traditional energy where over last few years, there has been a renewed impetus where we, the government and companies are themselves investing more in traditional energy simply because India needs to fund its energy needs and the shift from, a largely services-led economy to a little more of industrial and manufacturing. The policy environment has been quite stable. That has helped. The redeployment of the cash flow from this traditional energy can go nicely into the green energy space in those companies themselves. Finally, the new energy which can come in here, these would be probably new companies. These could be existing companies that transform themselves suitably. We think the combination of this can give you a pretty interesting investment opportunity, especially in the context of the sector, which has maybe apart from Reliance, not done very well over long periods of time. It's just the last year or so where stocks have started to maybe factor in the change in these dynamics, and something which we've also identified at this point. So yeah, I'm broadly done with what we had planned to discuss. Raj Gandhi, of course, is the fund manager. He has just under 2 decades of experience, mostly as an equity analyst, tracking particularly the energy and commodities space, both on the sell side, that's the brokerage side, and he's been with SBI Mutual Fund since 2017. Yeah, so I'll pause there, and we would love to take any questions, please.
Yeah, thank you, Rohit, for such a great, insightful presentation. I'm sure all my partners and my colleagues have taken a great takeaway from this presentation. And by now, I think everybody is having an in-depth understanding about the product and fair conviction to pitch it to the client. So definitely will be helping you wholeheartedly to collect the numbers in this NFO. And yeah, I'm having few set of questions coming from my partners. So I think I'll display it on screen for everybody's visibility and understanding. Just a minute. Huh? Yeah, so I'll just read out for a better understanding. So does this budget is supporting energy sector?
Yeah, I think with the budget, right? Honestly, now this budget was, as we all know, was likely to not be a big event, right? Simply because it was a pre-election, just a vote on account type budget. The budget actually had a larger focus on fiscal consolidation, which is probably the more important aspect which the government wanted to focus on at this point. As we've heard them kind of talk about, they've been very keen to see now the private sector kind of come out and really go ahead and spend in terms of capex, right? I think for the new energy, there had been maybe a few kind of measures announced. For example, the rooftop solar installations, or the viability gap funding for the offshore wind side. All the measures which they took on, which they spoke about for blending of the biogas and basically blending of biogas into CNG and PNG, right? So I think those were aspects which they spoke about, and mainly the announcements around that were kind of important. But I would think that we would probably want to look at probably when we get a full budget, the more clear picture on that side. I think the government's work which they've done in terms of PLIs, etc., has been a significant aspect which shows their intent on the green energy side. Okay, yeah, I take the next one, EV theme.
Yeah, thank you. So we'll move to next question. EV theme may fall in couple of years as concern over disposal of waste is rising. Kindly give your views on the same.
Yeah, no, this is an important aspect. And see, I also do the ESG fund, right, at SBI. We kind of talk to our ESG team regularly, both SBI and Amundi. I think so. It's certainly important to look at the total environmental cost, right? Many of these technologies, so the total carbon emissions or total environmental impact, including disposal, is something which is very important. And that is something which we realized actually in 2022 when we were, especially Europe, for example, we were kind of using electric vehicles or green energy, but you found that actually pollution was happening somewhere else, right? So I think it's important to look at the total kind of aspect out here. And certainly in terms of EVs, if you're going to use mainly coal-based power to fund, to rather to power EVs, that's probably not a great, a way to do it. Your specific concern on waste as well. Certainly, the recycling is something which will have to, go up so that this does not remain a huge problem over time. So those are probably new industries that will have to get developed over the years, similar to how you're seeing currently the disposable the waste collection, which you see in PET bottles, for example, that's being used in quite a few industries, including, say, packaging, etc. So I think we will have to kind of develop that as well. And there will be maybe more companies and more opportunities in this recycling space as well.
Thanks, Rohit, for bringing the more clarity. So we'll move on to the next question. Which are the 3 sectors to focus for in coming 3 years as energy as a theme?
Yeah, so the 3 sectors really that we are looking at is, like I said, the fossil fuels old energy side, which includes oil and gas and the power sector side. So oil and gas would be a pretty wide kind of theme where you can look at upstream, which is like the oil explorers, downstream, which is the OMCs and oil refiners. In the gas side, you've got transmission plays as well as the distribution plays, the city gas pump guys. And on the old energy, you've got on the coal-based energy or thermal, there you've got the generators, and of course the transmission companies as well. And then the new sectors really which will have to come over time are renewable energy, both wind and solar, whether it is the utilities themselves or ancillary companies which are into that space. So it's kind of like combination of all of these. And we would also look at, say, companies which supply equipment to the energy sector or are into EPC or construction of these energy or power sector or power distribution networks.
Yeah, thanks, Rohit. So let's move to next. Green hydrogen is still not fully operational. So what will you buy? Only fossil based?
Yeah, so see, at this point, you're right that green hydrogen is something which is in the works, right? So currently, much of the hydrogen which is used by refineries, etc., is gray hydrogen, which is more produced from the fossil fuel base. But this is something which is changing rapidly. So this is something where in this decade itself, you have major companies like Reliance, which have very aggressive plans actually on how low cost the green hydrogen can be. So combination of the increase in wind and solar capacity itself and use of it in the hydrogen space is something where, so this is something which is evolving. We'll have to see exactly how it plays out. But to start off with, the fossil-based companies and as their green segments are a smaller part of their existing books, that is something which we would need to look at, while of course learning more about the green hydrogen or renewable sector in general and looking for more opportunities over time then.
Correct. Yeah, so we'll move to second last question. How you see? Yeah.
Yes.
Yeah.
Correct,
How
correct.
you see India energy sector compared to other developing countries?
Sure. So see, certainly some developing countries will have also this energy sector play. So, for example, in a country like Mexico, there they have a similar story where the US wants to buy a lot more from Mexico rather than China, for example. So there they are investing a lot into sectors like manufacturing, warehousing, etc. And they have a severe power shortage because of that sudden need over the last couple of years. So there potentially there could be other countries where there could also be growth, and this is more on the developing countries side in nations which are switching more to manufacturing to be a part of the global supply chains, which were in the previous regime dominated almost 80-100% by China in several industries. That is something where as it gets more widespread, we will see other countries also kind of getting there. But I would say that still the major countries like US, the EU space itself, EU countries, or China itself, in general, the energy intensity of the GDP growth could be likely coming down. Whereas in case of India and other, say, countries which are increasing their manufacturing base, that's a space where energy could grow faster.
Yeah, thanks, Rohit. And we'll move to last question. Will the fund focus more on renewables?
Yeah, sure. So at least at the initial point, just given the opportunities in the market, I think direct renewable type plays would be relatively fewer. There could be some indirect type plays, whether through the capital goods companies, which are helping their clients work on renewables, etc., which could be a play, but that may honestly be a smaller part initially. Now, but for the companies which are the traditional companies itself, on an incremental basis, the renewables is getting to be a larger part. So to that extent, we don't know how it will exactly play out, but some, let's say, larger companies are also thinking on the lines of demerging, say, their renewable portfolios and listing them separately in the markets, doing a separate IPO, for example, of the renewable business. So one is if you already own those companies and get, say, a part of that by way of a split, that would be one way of, say, getting exposure there. IPOs or new options that come into the market over time could be another way to focus on renewables. But honestly, this will be small in the beginning.
Yeah, thanks, Rohit. And Rohit, at the last moment, we have received very good set of questions. So I'm just reading out for you. One is, will the fund invest in foreign securities? And if yes, then how much will be the portion invested in it?
Yeah, that's right. So see, the overall investment in foreign securities is capped at 35%. But initially, to be perfectly frank, we kind of you've seen generally our fund houses investments in foreign securities. It has been more on the US technology space because those are the initial companies that we had kind of worked on out there. So this is one that we would like to also look at it. So, if I give a parallel, why did we invest in, say, US tech companies? Because they offered exposure to a theme that we could not get in India. So if you wanted to play online advertising or AI or themes like that, it was more the US listed companies which gave you exposure there. And the Indian companies were on more traditional IT service business lines. I think something similar could happen over time in the energy space. And there are interesting companies on the renewable side or technology side related to energy, which is something where we could over time bring them into our coverage and improve our understanding of that, and then invest. At this point, I mean, we really do not yet have that, say, a complete understanding, I would say, of overseas the energy space. Having said that, let's say whether an overseas ETF focusing on clean energy could be an interesting place to start, for example. That is something which we can evaluate, but it's something which may take a little more time. I think initially the thought is you would have a more local portfolio.
Yeah, thanks for bringing the clarity. And the last question from my side is, see, there are many experts in the business who are saying all the funds are having their own cycles. So is the energy having any cycle and which needs to be taken care of? Any views on the same?
Yeah, that's right. So, certainly every sector has a different kind of cycle. Every style has a different, time at which it works in the market. And these, while some sectors have very short cycles, for example, you can think of autos where the cycle is, like, let's say, 2 bad years, 3, 4 good years, for example. But there are some which are longer, let's say, like real estate or whatever, has like a decadal cycle, which is there. I think here the energy as well, you've seen in the last decade or so, where there has been generally underinvestment in the space. So if you think about after 2012 or 2014, the amount of investment which has gone into the space has been quite low. And we are just in the beginning of a capex cycle in that space as well. And in general, we've seen that even say like regulated utility companies in the power space tend to do better when there is capex growth happening, when the market looks at them as growth stocks rather than value or just dividend or free cash flow yield type stocks. And that is when I think so even a stable sector like utilities, where returns are basically regulated, you have that cycle coming in when capex picks up. So I think it's a little more subtle. It's not so wild, like say a commercial vehicle cycle where you'll have sales falling 40% one year and then there'll be doubling or tripling in the next year from a low base. I think it may not be that dramatic, but to that extent, there is still a cycle at play, and take you back to the 2005 to 7 times when power sector was doing very well, for instance. So I think still, even in the context of a more stable sector, you do have these long cycles playing.
Okay. Thank you once again for answering all our questions and bringing more clarity to this presentation. And now I will like to request everybody to give the maximum definitely participation in this NFO. And I will bring it to notice for all my partners that this NFO is going to end at 20th of this month. So surely participate in the NFO and definitely take a best outcome of the same. Thank you so much, Rohit, once again. Thank you. Thank you, all our partners for joining in on time. And thank you for the participation. Thank you so much. With this, we are concluding this session. Thank you. Thank you all.